The Atlas Post. Are you considering forbearance for your home? What you need to know now is included in this video. Stay to the end for the acorns. The $3 trillion HEROES Act includes $175 billion in housing assistance to help renters and homeowners. Passed by the U.S. House of Representatives, the stimulus bill is designed to provide broad financial relief to individuals, businesses, nonprofit organizations, and state and local governments who have been hit by COVID-19 pandemic and, of course, the economic fallout. A consideration for homeowners is whether or not to declare forbearance, which gives you a pause in payments. So the HEROES Act would provide 12-month mortgage forbearance on government-secured as well as private loans for single-family residences, as well as buildings up to 4 units. Currently, the CARES Act covers only government-secured mortgages, which are about 70% of all such financial products. So this goes ahead and expands it. Homeowners who have missed 2 mortgage payments since March without receiving forbearance would be granted an automatic 60-day suspension of their loan obligations. Also, if you have your loan, make certain they did not put you into forbearance automatically without you knowing it, because I knew there was a glitch in one of the bank's systems about that. Also, upon borrower's oral or written affirmation of COVID-19 hardship, lenders shall stretch the automatic forbearance for another 120 days, which could be further extended into a whole year. Borrowers may also elect to curtail their forbearance experience, which we will get to more in just a little bit. Because the other part we're going to show you, you do need to know if you're considering it. The bill instructs its servicers to provide new forbearance seekers with the terms of their plans, including beginning and end dates, extension possibilities, and repayment options upfront. Homeowners would also receive the bankruptcy protections, including ensuring that a homeowner is not excluded from the mortgage forbearance program created by the CARES Act because of bankruptcy, increasing the amount of home equity protected in the bankruptcy process from $15,000 to $100,000. That's huge. And expanding eligibility for Chapter 13 bankruptcy by increasing the qualifying debt limits to $850,000 for unsecured debts from $250,000 and $2.6 million for secured debt from $750,000. As you can see, those are substantial increases. So here's a part that you need to know about forbearance. We are on the site for Fannie Mae, and this I think is very, very important for you to know. His forbearance may be an option if you are behind on your mortgage payments, on the verge of missing payments, or are experiencing a temporary hardship, which is what many people are having during this pandemic. Now, let's see, how does it work? It reduces your monthly mortgage payment or suspends it completely. So during the forbearance period, which is right now for several months, possibly, if you qualify for forbearance, you and your mortgage company will discuss the forbearance terms, such as the length of forbearance period, reduced payment amount if the payment is not suspended, and the terms of repayment. And after the forbearance period has ended, you will need to repay the amount that was reduced or suspended. However, you are not required to repay missed payments all at once, though you have that option. Other options allow you to add a specific amount to your payments each month until the entire amount is repaid. And usually what happens is the forbearance, it just gets tacked on to your mortgage payment. So it's like you did take a pause. If you're seriously considered forbearance, you do need this information because you have no idea what to do about it afterwards. Now, it's important to know that even though homeowners are allowed to do that, from Fannie Mae, it says that the forbearance is less damaging to your credit score than a foreclosure. And notice that it's less damaging. It does not say it will not have any effect. It says it is less damaging to your credit score than a foreclosure. That part, I feel, is probably one of the most important things that people probably look over. We are also looking for referral links for financial companies. Email us at the email listed below in the description of the video. Because if you are listening to this video, you're the only ones that know that it's there or what the email address is for. Today, we're going to spotlight Acorns. Thanks to Jim for the referral link. Acorns is an all-in-one investment, retirement, checking, and more where you start by a little and grow for retirement. Through the end of May, yes, we are almost Well, actually, we're a little bit more than halfway through. If you refer 4 friends with a minimum of $5, you earn $250. Our link can be found below in the video description. Isn't that exciting? If you get 4 people, please leave your comments, as we want to hear from you in your perspective about forbearance, whether you're doing it, whether you're considering it. If any comments that you think would be helpful to the community, because that's what these are all about, is to go ahead and help the community. But please let us know your appreciation. We would love a thumbs up. Subscribe for our updates. Check out our playlist. Come to the Atlas posts. And, of course, take advantage of the affiliate and referral links below. Thank you. All the best.